Hello everyone, welcome back to the channel. Today we are going to talk about a very important banking law in India called the SARFAESI Act. Have you ever wondered how banks are able to seize and auction properties when a borrower fails to repay a loan? Many people think banks must go to court first, but in reality banks have special legal powers under the SARFAESI Act 2002. In this video, I will explain what the SARFAESI Act is, why it was introduced, how the recovery process works, and what rights borrowers have. Let's begin. First, let's understand what SARFAESI actually means. SARFAESI stands for Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, 2002. This law was introduced by the Government of India to help banks and financial institutions recover bad loans quickly without lengthy court procedures. Before this law was introduced, banks had to go through long legal battles in courts to recover loans. This caused huge delays and increased the number of non-performing assets, also called NPAs. To solve this problem, the SARFAESI Act was introduced in 2002. Now let's understand when this law applies. The SARFAESI Act applies when a borrower fails to repay a secured loan. A loan becomes an NPA when the borrower does not pay the EMI or interest for more than 90 days. Once the loan is classified as an NPA, the bank can start the SARFAESI recovery process. Let's look at the step-by-step process. Step 1. The loan becomes an NPA after 90 days of non-payment. Step 2. The bank sends a 60-day demand notice to the borrower asking them to repay the outstanding loan amount. Step 3. During these 60 days, the borrower has the opportunity to repay the dues or raise objections. Step 4. If the borrower fails to repay within 60 days, the bank can take action under the SARFAESI Act. The bank can then take possession of the secured asset. This may include a house, land, building, factory, or other property used as collateral. After taking possession, the bank can sell or auction the property to recover the loan amount. Now let's understand this with a simple example. Suppose a person takes a home loan of 30 lakh rupees from a bank. If the borrower stops paying EMIs for several months and the loan becomes an NPA, the bank will issue a 60-day notice under the SARFAESI Act. If the borrower still does not pay the outstanding amount within those 60 days, the bank has the legal right to take possession of the house and auction it to recover the loan. But borrowers also have certain rights. If a borrower believes the bank has taken unfair action, they can approach the Debt Recovery Tribunal, also known as DRT. The borrower can challenge the bank's action in the tribunal and present their case. Now let's look at some advantages of the SARFAESI Act. First, it helps banks recover loans faster. Second, it reduces the number of bad loans in the banking system. Third, it improves financial discipline among borrowers. However, there are also some criticisms of the law. Some people believe banks sometimes misuse these powers, and small borrowers may face difficulties. That is why legal remedies like the Debt Recovery Tribunal exist to protect borrower rights. So in summary, the SARFAESI Act is an important law that allows banks to recover secured loans quickly without going through long court procedures. It plays a major role in maintaining the health of India's banking system. I hope this video helped you understand the SARFAESI Act in a simple way. If you found this video useful, please like the video, share it with others, and subscribe to the channel for more videos on banking laws, finance, and legal awareness. Thank you for watching and see you in the next video.